Your revenue is up, your sales look fine, but every month you're left with less money than before. You're working harder than ever, but something is silently stealing your profit. And the terrifying part? Most business owners don't even realize it's happening until serious damage is already done. That something is inflation, and it's not attacking you the way you think. By the end of this video, you'll know exactly where your profit is disappearing and the specific steps to stop it right now. Here's the painful truth most business owners face today. You look at your revenue, it's holding steady, maybe even growing. So on the surface, everything looks fine. But here's where it gets dangerous. Revenue is not profit, and inflation doesn't attack your revenue. It attacks your profit, quietly, slowly, from the inside. Think about what it cost you to run your business 3 years ago versus today. Your supplier invoices, higher. Your payroll, higher. Your energy bill, higher. Your rent renewal, higher. Your business loan payment, higher. Every single cost in your business has gone up. But your prices? Many of you haven't touched them. So what's happening? Every dollar of cost increase is coming directly out of your profit margin. Take a restaurant owner I know in Texas. From 2023 to 2025, his revenue was totally flat. On paper, it looked stable, safe. But underneath, he was bleeding. His food invoices climbed another 12%. His payroll shot up 15% just to keep his kitchen staffed. And his monthly electric bill spiked an extra $600. Same sales, but his profit was vaporized. On paper, he looked fine. In his bank account, he was slowly dying. That's not a Texas problem. That's happening to business owners in every single state right now. So why is this happening? And why do most owners miss it? Because inflation doesn't hit you with one big punch. It bleeds you with 7 silent cuts. Silent cut number 1. Cost creep. Your supplier raises prices 3% in January, another 4% in June. Your packaging costs jump 15%. Each one feels small, but add them up, and your costs have risen 22%, while your prices stayed the same. That gap? That's your missing profit. Silent cut number 2. Wage inflation. The labor market completely flipped on business owners. Minimum wage is hitting historic highs coast to coast. California is at nearly $17 an hour, with fast food at $20. New York is up to $17. Even Florida hits $15 this year. To keep your current team from walking out the door, workers are expecting 10% to 20% raises. And if they leave, replacing just one employee costs anywhere from 50% to 200% of their annual salary in hiring and retraining. You are paying significantly more just to get the exact same output. That gap is pure profit loss. Silent cut number 3. Inventory cost lag. But most owners miss this one completely. You bought inventory 6 months ago at the old price. You sold it at the old price. You felt fine. Then you went to restock, and the new price was 20% higher. You just sold your way into a cash flow problem. The profit you thought you made was already gone before you counted it. Silent cut number 4. The debt trap. The Federal Reserve raised interest rates 11 times between 2022 and 2023. 11 times. If you are relying on a variable rate business loan or a line of credit to survive, this was a lethal blow. A $500,000 loan over 10 years at a 5% interest rate used to cost $5,300 a month. Today, at 8.5%, that exact same loan costs $6,200 a month. That is an extra $900 every single month gone. Not because of a bad business decision, just from inflation fighting inflation. Silent cut number 5. Customer behavior shift. Here's where it gets dangerous in a completely different way. When inflation hits your customers, they don't stop spending. They change how they spend. They trade down to cheaper options. They delay purchases. They cancel subscriptions and recurring services first. They start price shopping businesses they were loyal to for years. So your revenue drops, while your costs stay high. That's a double punch most businesses can't survive. Silent cut number 6. Pricing fear. And here's the most dangerous silent killer of all. Most US business owners are terrified to raise their prices. They're afraid of losing customers. So instead of adjusting prices, they absorb every single cost increase directly into their margin. And they keep doing it, month after month, until the margin is completely gone. This pricing fear alone has quietly destroyed thousands of American small businesses in the last 3 years. Silent cut number 7. The phantom profit tax. This is the most frustrating trap of all. Inflation forces you to pay taxes on money you didn't actually make, Let's say you sell older inventory you bought cheap, but you sell it at today's higher prices. On your financial statements, your profit looks massive. The IRS looks at that inflated number and hits you with a higher tax bill. But in reality, that profit isn't real cash you can pocket. You need every dollar of it just to buy your next batch of higher-priced inventory. You are paying real tax dollars on an illusion. For sole proprietors and S-Corp owners, this cash drain is absolutely brutal. So what happens if you ignore this? First, margin erosion. Your business looks successful from the outside, but you're barely paying yourself. The gap between what your business makes and what you take home keeps shrinking, and you can't figure out why. Then, cash flow crisis. Even with strong sales, the business starts running dry. Bills pile up. You're floating payroll from your personal account. You're maxing out your line of credit just to stay operational. Then, the debt spiral. You start borrowing to cover costs that inflation makes unaffordable. The loan payments add to your costs. Your margin shrinks further. You borrow again. And here's the final consequence. The one that breaks business owners emotionally. You work harder every year. You take home less every year. And one day, you look at your bank account and realize you've been running a business that's slowly been working against you this entire time. This isn't just theory. According to the National Federation of Independent Business, 32% of all small business owners explicitly named inflation as their single greatest existential threat. That is the highest, most volatile level recorded in over 40 years. Even worse, a staggering 50% of owners reporting lower profits directly blamed one thing: the crushing historic cost of materials and labor. This is real. The numbers don't lie. And it is happening right now. But here's the part nobody talks about. Inflation is beatable. You just need to fight it with the right strategy. Strategy 1, audit your margins monthly, not annually. Stop looking at your P&L once a year at tax time. That is fatal during inflation. Pull your numbers every single month. Track your gross margin percentage, not just your dollar revenue. If your revenue goes up 10%, but your gross margin drops from 45% to 38%, inflation is winning, even though your revenue looks fine. Use QuickBooks, Wave, or FreshBooks and set a cost alert. Any expense line that rises more than 5%, you review it immediately. Strategy 2. Stop absorbing costs. Start repricing. This is the most important strategy in this entire video. Raise your prices. Stop being afraid of it. The businesses that survived inflation didn't absorb costs. They passed them on intelligently. Here's how to do it right. Raise prices gradually and frequently, 5 to 8% every 6 months, rather than one big painful jump. Be transparent. US customers accept price increases when you explain why. Chipotle and McDonald's both raised menu prices publicly and communicated the reason, and their loyal customers stayed. Use bundling, premium tiers, and surcharges as pricing tools. The customers who leave over a fair price increase were never your best customers to begin with. Strategy 3. Lock in your costs before they rise further. Do to your suppliers what inflation is trying to do to you. Negotiate long-term supply contracts with fixed pricing. Buy in bulk on stable, fast-moving inventory. Lock in fixed-rate financing right now before rates shift again. When you renew your lease, negotiate a CPI cap clause so your rent can't spike 30% overnight. Strategy 4. Cut fat, never muscle. During inflation, you need to cut, but what you cut is everything. Cut unused software subscriptions, underperforming ad spend, excess inventory tying up cash, energy waste. US utility costs have risen over 25% since 2020. LED lighting and smart thermostats alone can save hundreds per month. Never cut. Your best employees, marketing that's working, customer service quality, technology that replaces expensive labor. Cutting the wrong things accelerates your decline. It doesn't stop it. Strategy 5. Build recurring revenue as your inflation hedge. This is the move most business owners don't even consider. Service businesses adding maintenance agreements, retailers adding subscription boxes, restaurants adding weekly meal prep plans. You lock in revenue at today's prices, while your costs are still manageable. Recurring revenue is the single most powerful inflation protection a US small business can build. Strategy 6. Protect your cash flow like it's oxygen. Keep 3 to 6 months of operating expenses in a high-yield business savings account. Right now, US banks are offering 4 to 5% APY. Use inflation against itself. Tighten payment terms. Move clients from net 30 to net 15. Offer a 2% early payment discount to pull cash in faster. In an inflationary environment, cash flow beats profit every single time. Here's exactly what you do this week. 5 steps, starting today. Step 1. Pull your last 3 months of financials right now and calculate your gross margin percentage. See if it has been shrinking month over month. Most owners have never done this exercise. It will shock you. Step 2. List every single cost that has increased in the last 12 months. Write them all down. Supplier costs, labor, energy, rent, loan payments, everyone. When you see the full list together, the picture becomes very clear. Step 3. Identify one price you can raise this week. Even 5 to 8% on your most popular product or service. One price this week. That single action will do more for your margin than anything else on this list. Step 4. Call your top 3 suppliers. Ask for a long-term contract with locked-in pricing. The worst they say is no. The best outcome? You've locked in costs before the next price increase hits. Step 5. Set up a monthly margin review on your calendar. Make it non-negotiable. 30 minutes every month looking at your gross margin percentage. That habit alone separates business owners who catch inflation early from the ones who don't catch it until it's too late. The business owners who complete these 5 steps this week protect their profit. The ones who don't keep losing it quietly every single month. Here's what I want you to remember from this video. Inflation doesn't kill businesses with one big punch. It bleeds them slowly through cost creep, pricing fear, and margin erosion, until one day the owner looks at their bank account and wonders where all the money went. But the business owners who see it coming, who track their margins obsessively, price with confidence, and protect their cash flow, they don't just survive inflation. They come out stronger than their competitors who didn't pay attention. You now know exactly what's happening, and you know exactly what to do about it. Now I want to hear from you. Which of these 7 silent killers has hit your business the hardest? Rising supplier costs, wage inflation, or pricing fear? The fear of raising your prices even when you know you need to. Drop it in the comments right now. I read every single one, and your answer might just be the topic of my next video.